Hey everybody, welcome to July 9th, 2026 Principal Profit Trader Coaching Call. Well, we've been stayed out of the bear market, guys, right? We understand now how to determine bear markets. We understand we don't buy the dip that keeps dipping. We sell the rally, right? At the same time, we have to gauge whether each rally, now that we get deeper and deeper into the cycle, it's something substantial that we should be taking note of as investors or more counter trend rallies that fail. So that's what we're looking at. The pattern that really helps in this type of context is the bear flag pattern. Let's go on the daily. We can see that a little better. You can see that the major bear flag that we were into that had a really from February to basically the winter time and part of the spring here failed at this double top at the top of the flag. Then we had the pull down. And when you drop 30%, you're probably going to consolidate, right? And that's what we did. We had the hammer candle here, which is a pause day, sideways up the next day. When you go into larger time frame resistance for the first time, you have a good reaction for a test. You can see there was this inverse zero line reject that got pulled back. That eventually turned into a shamu. We made a hammer when we hit this double bottom. We had the leg up into the 20 moving average that has acted as a resistance zone on the daily, right? And now we've broken down into a sideways channel where we've had a balanced breakout pattern, which tend to, at the very least, move 100% of the range that it broke from. No coincidence that it should be a little higher. Hang on a second. Close enough. That when we did move about 100% of the range, we had a little false breakout pattern. And now they tend to go to the bottom of the range where buyers can be active again. And now we're in this basically bias changing key reference area right now. Okay. Now, this bias changing key reference area, like I said before, like today had good odds based on the fact that we did close above the 20 with a zero line reject, that the downside momentum was not strong enough such that the bulls couldn't step back in. And you can see on the daily timeline, we had a nice wide double bottom on the hourly. Now we will look for, lower time frame divergences, or we will look for lower time frame exhaustion zones, right, to get some type of an extra edge. But at the same time, right, the most important thing that we are doing here is we are going on the daily and we are going to be gauging a few different things here, because when you think from a top-down multiple time frame approach, let's get rid of the 60 for a minute here. We're going to leave it. You can plan things out better. So remember, there's a zone fade for a tradable reaction. That's like a scalp. You can go into the next zone. Maybe in that situation, maybe the quad exit shouldn't be used as much because you're not trying to build a running position at that moment in time, because the odds are, for example, that you're not going to have a runner that keeps going because you're not at a bias changing area. For example, when I gave the signal to short up here, this was not a zone fade for a tradable reaction, aka scalp. It was a zone fade for a reversal, aka a swing trade. Now, the way that we do that is then we can employ a quad exit where we can build risk-free runners down into this. Now, you could use it as a microcosm for the scalping, but you're probably not going to make as much money, right, on that time frame for a scalp, which is based on a lower time frame 60-minute idea rather than this weekly thing. Now, we're going to, as this, we had this strong piercing pattern, not quite an engulfing. We have this hammer candle now. We haven't pierced the 300, but we did pierce the 200 like we did last bull run. Last bull run, we did hit this and break below it and go down further. I am gauging now whether the momentum is sustainable now. We talk about the category on our daily call that I've added as sustained momentum. It is a real-time category and a non-real-time category. Most of if you're just trading the template of the daily call, which I don't know how many people even really are trying to practice what we teach or just use what I say or just watch. I don't know. No one shows up. But And we've had like 3 to 5 people quit recently just because of a bear market and other reasons. So it's tough, right? These are all signals that we're getting that people have really lost interest in this. Guys, the people that stay around, even if it's just me talking to myself, or there's like one person paying and there's one person in the room, there's going to be an opportunity where we can possibly load up on Bitcoin at absolutely discount prices. I've held you out of it this far enough. Just trust my intuition right now. We don't want to buy at the top right now while we're still in a confirmed bear market, while the fourth quarter typically is when it repeats based on the Bitcoin PPT time cycle chart, which hasn't failed us yet, and in confluence with the 4-year cycle. And just, like I said, how it's previously behaved in the past. We're going to look at the Gaussian channel in a minute here. Now, when we talk about the red over the blue, it's confirming the downward momentum. We are now into the 20 level, which is a level that begins to show signs of being oversold. Typically can predict bottoms on this time frame. You know, the problem is that, like I said, it does take time. It can go sideways down in here for a while. So this is not a confirmation yet of any means. And while that's helping us from an investment or larger time frame point of view, on the daily, if we actually clone this indicator, I hope I don't have too many where it becomes problematic, but we're going to paste it. You can see clearly now we have the contradistinction of that. We have the complete opposite. So our weekly and daily time frames are in contradistinction, which is very, very difficult for a human being that doesn't understand multiple time frame analysis and daily calls and system-based thinking to execute risk-free trades. I've been in my mind simulating a lot of trades. I would have been on a winning streak right now, but I'm following my system. When I'm in 2 different legal issues, I am not trading right now. Or I've significantly reduced it. I will actually, when my setup does happen for that 300, I will go all in. I'm going to tell everyone, write that now. For a counter trend rally that I imagine was going to be more substantial than what we've had so far, but I will be taking profits because like I said, I'm betting on what Bitcoin has done in the past. I'm not going to bet until I'm proven wrong. I'm not going to bet on the anomaly that now this time is different. I've heard that so many times. I've been doing this 10 years. I don't want to hear it anymore. Should have stuck with the S&P trading index futures. Okay. It just goes up and up. Um, anyway, so you can see how this is confirming the uptrend, and now we're in the opposite category. And now we're in the overbought territory. I might have misspoke when I called this. See, I backtest my ideas. A buying tail. This was not in the context of a buying tail. A buying tail has to be into a support zone. I mean, this could have been a trend pullback continuation, but no. This is called a hanging man candle. This is actually pretty bearish. So I kind of implicitly spoke when I called it a buying tail just because this tail is bigger than that. You need an actual candle. We closed right in the middle. I gave you all the definitions for it. Nevertheless, this double bottom on this time frame, which I almost traded today for a scalp, did hold because we were above that. So I focused. So when you see conflicting ideas, the amateur says, this guy doesn't know what he's doing. But the professionals think, hey, we're in an uncertain territory. There's conflicting data. Let's be objective. I'm giving you the data. The daily's bullish, the weekly's bearish. Bam, there you go. But the weekly's not completely bearish. Like I said, it's in now an oversold territory. It just hasn't confirmed it yet. We need to break up above it and then start. It has had a slight, like I said, but it just goes swipe the blue over the orange, but that's not confirmed yet. It needs time to develop. Here we have the opposite now a little bit. We have now red over orange, which could portend a down move. It has right here. If we mirror this, because this is, we have to use the same principles for our RSI, our relative strength index, which is a gauge of momentum or not. We need to have sustained momentum. It's very important. And you can just see, let's back test this. Okay. Now we were at this point in time, at the bottom of the flag, we were in a counter trend rally. So the bulls were in control from a synthesis of a larger time frame bias, which don't say that if you don't understand what I mean. There's bigger picture bias, bearish. There's intermediate bias, that's the last few weeks. That in this case, was up. And then there's a short-term bias, which was also up. When two are aligned, then you have a larger time frame bias for your day trading. Okay, we have to think in terms of multiple time frames here. So we also don't want to get confused with language. We also have to back test our ideas. This is the zone that would mirror the 300 on the weekly that I'm preparing psychologically to buy if we have a breakdown. Also preparing for the opposite. This could be a inverse head and shoulders pattern that could then break and test the 50. Then I don't think it would get higher than the 100, 200, which are starting to roll over. Guys, we're in a bear market still. When they started to roll over, they were sell the rally. You see, this was a counter trend rally that still had big pullbacks, but then when it hit this, we had our move down. That is an important moving average. It holds in a bear market. In order for the bull market to start, just look in the past. We really need to break this 200 moving average with conviction, with a really lots of vertical volume. Now we can use exhaustion to time these counter trends for us position traders. And if you're just a portfolio guy that's been holding all the way down, that's great. I only counter trended one. I only actually position traded the portfolio on the first one here, which was psychologically much easier for me to do because once we broke this and we had two lower lows, I was like, oh my God, bear market. Like, if you guys remember back in the day, I did sell part of my portfolio up here. I listened to other people and I didn't fucking press the trigger. Thank you, executioner. I could choke your ass right now, motherfucker. Bless it. I got better because of it. And then when this candle happened, that was a bearish candlestick reversal pattern. I told you when it took out all that data that, okay, see you in 4 years, meaning I think it'll be 2029, guys, when it gets back up here. At the time, two people in the channels gave counter ideas. Okay, that's fine. I'm not like, oh my God, I can be wrong, but I'm not wrong based on my data. Let me tell you something. If this happened and then it broke out, you, in my opinion, would have still been betting on the lower probability idea. No offense. I'm not, this is, how much leg counts can you have up? How much can you have a triple top here? Like, look, triple top, bam, last bear market, bam. We had a huge run. The 4 year cycle was in. When we came up here, that's when we had Corby back on. He confirmed it. That was the real start of the bear market on this one, or maybe it was this one. It was one of these pullbacks. I still couldn't feel it. He had to come in like a horse and smack everyone around. Even though I called it here, I then got hopium again. I'm just telling you what I was feeling inside, even though I knew the system was telling me the opposite. I can go back in time and show you CCI divergences and divergences into overbought territories on the relative strength index as well, but we don't need to do that. We can see now that we're in this huge inverse cup and handle. I mean, head and shoulders that broke down, and now we're at a bear flag that broke down, and now we're in a double bottom that has then popped up into it. We're in a very tricky spot right now. A very tricky spot. Multiple time frame analysis. I could have put on a long right here while still not going long in the portfolio because I'm waiting for a washout into a lower zone for a larger time frame move. Because we have to have crazy momentum, guys, to break this. Because A, we're in a confirmed bear market. B, we're going into major resistance right now. Even though there's this inverse head and shoulders, right? This bear flag that we broke from is technically a bigger picture pattern. And we can just do this. It's much easier. I was going to draw support and resistance zones, but let's just object tree this guy. There we go. I don't want the VWAP. Get out of here. I meant the VRVP. There we go. Nope. Yeah. Right. So we are right at a key high volume node, right? We made two lows here that then broke up. So we're sort of around that area. I mean, we haven't broke it yet. It looks like what I think is going to happen based on this is a pullback continuation pattern based on this. There was no kind of issue here. There was this inverse zero line reject. We are in overbought now on the daily where the red has crossed over to the blue. I just want to talk about that where we did hit this and then the red crossed over the blue here. We did come up here and have this pullback on the red crossed over the blue. Same thing up here. And in order for that trend to, let's go back up and back test this idea back up in here. Because I haven't really been using this as much on the daily than on the weekly, but you can see it's pretty nice. You can see it's mirroring, right? This is how I was one of the ways I was able to short this. I can't remember. I must have gave it on the double top because I kept talking about it. You see, the micro pattern was the double top, but it was at this huge major resistance zone in confluence with the 200 moving average. But the moving average is only an amateur's category. The real category is what Corby talked about, beauty principle. We went back in time, and the last time that it touched that was like in 2021. Okay, when you have huge spans of time and huge amounts of data, right? It becomes more significant. Look at this. That's why I was like, I might not even quad exit this sucker to hold my runners down to here. I might just hold this motherfucker all the way down here and break it all. I really was thinking that. I just couldn't do it. I'm going to get better at executing and giving different ideas. And that's not hindsight. Like, why would I want to hold for bigger returns and possibly mitigate, have maybe larger targets for my quad exit because it was at that major zone. Where do I want to back off shorts? Like, I was shorting all week here. That's at a shitty zone. Why? Because I knew that this was probably going to be a trend line. We're going to have a counter trend. Psychologically, it was harder for me to catch that. So I'm not even going along right now. I should be going long more. Last time I went long, like I said, was up here. I mean, for a big portfolio. I'm saying for the day trading, I should be going along more, at least on this one, I think. So, and that's just the reason why I knew to go long here, but I didn't want to go on the portfolio is that I was sort of conflicting the two energetically, and I just wanted to state out loud now for my own energy body. Plus, I wasn't supposed to trade. I'm dealing with some stuff, but okay, so like that would be a day trade on a full size because it's at this wide double bottom, but it wouldn't be the portfolio reload yet because there's not evidence of that of a bottom yet on a larger time frame. We're just going back up into a high volume node. And this is, we talked about a hanging man candlestick pattern. Okay. This indecision area to me, and because we're at this buy, we were kind of in a hanging man trading range on this time frame because everyone's so caught up in this head and shoulders pattern, but doesn't it look so much smaller than this? So just keep that in mind while these roll over on each other. And while this daily, which was the only thing that really was trending, because like I said, when we went on the weekly, the RSI was going down. You see the RSI is bearish here. It's starting to flatline. That's good. And what that means and suggests is that coming soon, there's going to be a very awesome opportunity cycle to go all in and smash on Bitcoin. And those that have stayed with this channel for the whole time are going to, get rich on it. Like imagine buying Bitcoin if you can really get ready to dollar cost average 37.5 can be an all in, right? Let's say you're dollar cost averaging, or you have some on the side, right? And if we just say it goes down 80, 90% like every single time, that takes us between 25, and this sounds crazy, like 15 to even maybe $15,000 basically to retest the old lows if it just follows what it's done in the past. And I know that sounds crazy, but that is a possibility. I mean, who are we going to believe? I don't understand how Tom Lee, Kathy, whatever Lee or whatever, not no, there's Tom Lee, that Kathy something, and all these other big hedge fund managers. And then Michael Saylor's team. Why are Michael Saylor's team buying at the worst? Like, why don't we work for Michael Saylor's team? Like PPT should be funded $5 million a year to tell Michael Saylor when he should buy. I mean, one of the reasons he has to sell now is that he bought every fucking dip. I'm sorry I'm swearing this episode. No one's on it, and I'm dealing with two lawsuits, so I don't mean to swear. But I won't try to cuss that much. So he bought every dip and even bought some of the breakouts and was buying up here because he was like, never sell your Bitcoin, your kidney. Sell your kidney over your Bitcoin. And now Michael Saylor, who said never sell your Bitcoin, is selling Bitcoin. And it's not like an astronomical number, but it doesn't have to because selling can foretell more selling due to a self-fulfilling prophecy and other people just mirroring his fear. Okay, so we talked about this relative strength index here starting to look good for a potential opportunity, but it does not say to go all in right now. No way. This has been going down, confirming the downtrend. But this little mini uptrend here, when we had this double bottom in this trend line, where, this is another reason I can't believe I should have just at least, I could have logged the portfolio for a smaller one because I saw this too and I refused to do it because I say, okay, just go long on the day trade then. You see this double bottom here into this trend line? Okay. After, you do your leg count, you realize, holy shit, we just went down 30%. Duh. You know what I mean? People are going to take profits on their shorts. this is me saying down to myself because I saw this and I just couldn't because I'm so ready to go all in on this 300 thing. That was what my nervous system is fired up because it's a lot of it's just a stressful shit. Man. We're always dealing with uncertainty, so I need to have a lot of odds on my side. But I need to, like I said, differentiate zone fade for tradable reaction for more for a shorter term thing. Because like if I did buy here, I would be very concerned about what's going on in here. Like I don't want to get if this breaks down here, like you're giving up a lot of profits. This could, like I said, forecast a test. That's I can't drag this. I was trying to get the box down here. I'm just gonna get rid of it. Clone a box, it would test down here. That could be, the opposite. We don't know yet. We have to be careful. But like I said, this 50 is rolling over. I don't think it gets much higher than 765, 722. It would really need to break that with conviction to then break this key swing high and then the 100, which has been rolling over. Let's just take a look at how that 100 has acted on the weekly in particular. That's the 100. The other thing, too, I wanted to point out on the weekly here. Yeah, I'm on the index here. Is this bearish cross between the 100 and the 200, right? You see how that's starting to roll over, right? We're having a bearish cross where the 100 now rose above the 200. That didn't happen, right? For the entirety of the bull market, the golden cross happened, right? Where you had the faster one rose above the slow one, and you can see that held. And one of the key things that confirmed the breakdown was this is why I also told everyone to get out here, get on this pullback when we got it down on this, and then we reloaded here, we got out around here, was because now this 50 had held as support. Now that it broke, bear market confirmed, in my opinion, even though technically it would need to make two lower lows. Boom, boom, boom. This is the confirmed one down here. This was the bigger rally, which hit this trend line, right? Perfectly down. Do we get this bigger? So let's talk like we could talk a little Elliott wave here. I'm trying to think how I could do this. Maybe on the daily would be better. I would need to draw the same channels I have here. It's like 1, 2, 3, 4, 5. And when you have a 5 leg count, we can just have a little bit more substance to our leg count calls here. Then you have an ABC correction for the counter trend. Let's go on the daily for that. And the ABC correction is a 3 leg count. It's a one wave. I'm sorry, let's get down here. One wave. We've had the one wave correction. Now we're pulling back. Could we get the second wave correction? And that's where I think this is going to stall when the second and third wave correction would come into here. Like I said, it would need a lot of momentum even to break this. I don't know what's going to happen right now, right? We're at this key high volume node, which we've recently for the last couple of weeks, 3 weeks, 4 weeks in that box there have sort of traded around it. I don't trust it, but I know something is going to happen out of it because that's where trends start to happen. It's just such a key area. It's either going to complete the second wave of the ABC correction. Remember I did the ABC the other day. That's how I was able to call this pullback. 1, 2, 3. I can go back to that chart. I'm not saying this in hindsight. That's why I just wanted to give you a little bit more detail why I did the ABC correction, because we had a 5 Elliott wave count down. After 5 legs of Elliott wave count down, we have an ABC corrective market. Now, what would be the anomaly? Breaking this, and like I said, breaking this key swing high up. Unfortunately, up here, that would have to really confirm it. This would start to, if we broke the 200, that would get me really thinking that this is the next target. Okay, something really different is happening. I'm postulating that scenario to let my body, which is extremely bearish, be okay with it. Just like I knew that there was going to be a counter trend here for a day trade, but I knew that there wasn't enough evidence for my portfolio to go all in, so I still didn't want to go long. At least I'm not going short all the time and just getting smashed, right? But shorted here, shorted I knew that we go sideways, but then I was like, just go long. We're getting close to here. This could be a great move. That's why I want to say there's a zone fade for a trailer reaction, which is a day trade to a possible swing trade, and then what you do on a smaller size. And then there's your giant portfolio reloads that you want to do at the major turning points when there's a lot of evidence that we're going to get huge moves out of it when we buy the final dip. Donald Trump's son said that this will be the last time you'll ever get to buy above the $90,000. Here we are at 63,000 and the 4 year cycle straight on. Because if you buy the dip that keeps dipping, then you know what I mean? You are falling for lies and scams. You're the dip. So don't be the dip that keeps dipping. Don't be a dip. So moving on, if I clone that, we could, like I said, break this, and then we're dealing with this rolling over, which would be interesting. Yeah, it's like I said, I don't know if we're going to get that corrective posture. I still think the better odds, at least for me, is that it will test this from a dog leash perspective, beauty principle style. It does get there around this 300. I'm okay with reloading a large amount here. Um, there is this key trend line as well that we've hit here, hit here. The body's hit here. There's another one for the wick here that I've drawn, but I'll talk about that. Then we hit a double bottom here. We hit that. And we hit that nice predicted counter trend. We broke that. So like the retest of that with the 20 coming down on the weekly, right? Like I said, this one, two, three, four ABC correction that I drew could possibly stall at around 69,000 because of that. And then we get the bigger move down. They would then take us into the next leg count. One, two, three, four, five. You know what I mean? For a 49. And then possibly if this holds on this trend line, then the low to mid 40s, possibly high 30s around this area become the lows. If we break this with conviction, which is done every single time, if we just say, hey, it's down 80, 90%. And this becomes the other trend line that we're going to be hitting. I mean, we're talking then 37, 37 and a half thousand. Don't hate on, right? Love it. Love it. We have to see evidence of this. And then if really could possibly happen, if we get a Michael, this is what I think will happen if we get, this is the COVID black swan. You see that picture of all the things that happen around a black swan? Pandemic was there, crazy war, Michael Saylor what if Michael Saylor just causes something that looks like this? Let's just see how, I heard he got really angry at an interview too. I mean, that does take us down to like the 25,000 area. This takes us down to that 14, $15,000 area, which I think is possible because what might need to happen for Bitcoin, and why wouldn't the global elites want to rob everybody? If we just zoom out really high on this weekly, I know it's not touching here. Am I cheating a little bit? For a flag. I just wanted to point out that we're potentially in this type of a channel. Okay. I mean, would it be so crazy that it would hit this and just complete the channel, and this time it just hit the median, and then just an idea. I'm not saying it's going to do that. I'm just saying be open to it and get ready to bet the farm if it does. That's there's going to be obviously it doesn't go straight down, so we want to get counter trends that don't fake us out of our moves, and also we want to capture those as well. But mostly what we want to do is be shorting the market, right? We sell the rally at the peak when it starts to show bearish divergences and so on. Or if you're just a huddler, you're just not buying every breakout kind of thing, or not buying every big pullback because you're buying the pullback that keeps pulling. And you don't want to do that. Let's see, what else can I talk about? Let's see if anybody's on the call for a question. Nope. It's okay. Well, how long have we gone? Not that long. But I mean, I'm giving what I think is the most honest way to look at it based on what we discussed and all the different probabilities and the holistic viewpoint of this, using daily calls on multiple time frames, doing architectural analysis, so we can understand what we're doing and when. We don't just want to ape into something, right? Aping into something would have been buying every single breakout, or buying this, holding here, not taking profits because you think you're a genius, and up here you really thought you're a genius, and now you're like, what the fuck? I'm below break even. We don't want to do that, guys. We really don't want to do that because while there are people talking about a head and shoulders here on this time frame, if we just zoom out on the largest time frame, we have a, I'm sorry, this would be an inverse upside down head and shoulders guy, which is bullish. But you see this head, this shoulder, I'm sorry, this shoulder, this head, and this shoulder. I mean, that really could play out. Or even if I drew it here, here's a head, here's a shoulder, here's a head, and there's another shoulder that could break down. The other thing that I want to talk about is that black swan thing. And like I said, I like to focus on Bitcoin, and I haven't been using a lot of Confluence and other markets lately because I just think Bitcoin's been just revealing itself pretty much as the main leader. But I am now going to start because I used to use Ethereum, remember back in the day for synchronicities, it's just too much data. If we look at intermarket relationships was that category, by the way, that you could add to your daily call. But you just want to use what's working. Let's look at MSTR on the daily, or maybe it was on the weekly that I drew that. Let's go there. Yeah, we talk about this Adam and Eve bigger picture pattern. We're learning and we're adding data and bigger picture patterns because we've talked about, the obvious ones, bounce breakouts, bounce breakdowns, or false breakouts and false breakdowns. But there's also, like I said, the head and shoulders, the inverse head and shoulders. Now we're going to talk about nuanced ones like wide double bottoms or inverse double bottoms or dynamic double bottoms. This is the Adam and Eve pattern. Okay. And an Adam and Eve is a little different than what you would think for just, oh, it's double topping, it's topping. No, it has a sharp rally, it pulls back, and then a more rounded one where it gets close, but not quite. That is a very crazy and bearish pattern for a topping pattern. That, and look at this is strategy, not Bitcoin. But this yellow flag is when Bitcoin crashed last bear market. Okay, you see how it beautifully lines up? Now we go here. Same thing. Here's the Adam pattern. That's the one that's the sharper one. Here's the Eve, the more rounded one. A huge breakdown coinciding now right here. Why is that off a little bit too much? It should be right here. Yeah, it's like around this peak here that we're now in a bear. Okay, so just be aware of that. Be aware here that last time strategy, right? Hit this 300 and broke above it, which we're now about to back test. Like, let's just get rid of this. This is looking, like the weekly candle has sort of like looked down, and this could be broken 300 now acting as resistance. Look what happened last time, kind of had it traded around it a lot. We held underneath it quite a bit. Just keep that in mind that could potentially happen. We go up here and we start going down. And then that could, like I said, create a black swan in Bitcoin. More people panic. It gets down to prices everyone thought would never happen again. The other thing, too, that I just wanted to point out a couple of different things. Like I said, I used to post signals for the S&P 500. It just became too much. I have taught breadth analysis there if anyone wants to learn that. It's very unique with different market internals. And you can't use breadth analysis with anything other than indices because it shows what's underneath the hood of the stock universe. I digress. We're on the S&P 500 because I just want to point out that we have this diamond topping pattern here that we talked about, that we've added that to our bigger picture category. Like I said, the guy, Tom Alexander, who has the stat that 90% of the time, the higher the low of the day, the trend day ends in the last few hours of the day for the S&P 500, also has a stat on diamond patterns. And that stat is that I think it was like 54% of the time they would have just broke down here, popped up here, and then broke down. The other 46%, it does a couple different things, but it's still bearish. One of the things is it tries to make a mediocre high, like almost here. We'll see if this tries to break it or not. And then it gets started. The other thing that it does is that it could potentially even make, oops, a higher high and then make sort of a mediocre breakout and then come back down. Either way, they have a very high probability in that particular study of indicating a topping pattern, right? And otherwise, seemingly what we would consider a healthy market, which, like I said, could potentially bring us down to this trend line again. Or up, diamond topping pattern, because it's like one leg, two. We can keep counting leg counts as well. So just be aware this could potentially lead to a test of the 100 and 200 here, right? This V pattern might hold. If we don't get to this, there is the high volume node of confluence here when you have horizontal and directional support. It adds more of an energy to it, but we still need to break through this. If it does hold here, this would be an opportunity to form a pattern potentially of a head and a shoulder as well. But what I'm concerned about now is just letting people's profits that got all the way up here go all the way back down here because we're traders and we understand that we're not going to let our S&P go down 1,000 something points, okay? Because I'm hoping to cash out in 20, 30 years. I mean, that's what your wealth manager that just collects your money does. They don't really get in and out and give these types of signals much because the one, they don't want to seem like they're churning the account, and two, they might not have the savvy to do that since they're doing so many other things for you as a wealth strategist. I'm not an overall wealth strategist, obviously. I'm just showing you patterns based on our system that I'm showing you data, right? So we can make the best decisions possible. Keep in mind, MicroStrategy often correlated with Bitcoin. This is an interesting Adam and Eve pattern. It's not the holy grail, nothing really is, but we're just aware of some things. Now, moving on, let's check out our Gaussian channel or go to our education. All right, we're going to go to our Gaussian channel here, which I've also added the 200 and the 300. You could see as our Gaussian channel was making the bear rally, right? The rally in the bear market, the bottom of the standard deviation of the Gaussian channel acted as resistance. And here, when we hadn't quite broken that, the meridian line or the middle line acted as resistance. Typically, what happens is you would need to break the meridian line again, right, to confirm above it a bull market. Boom. And then retest and it's off. We're not going to wait for that. We're going to wait for the absolute bloodbath in the street. Fourth quarter still predicting a Bitcoin bottom. I'm going to show you why that is based on our time cycle chart in a minute, but I'm also going to do some, the inverse zero line reject on the 2-week chart on the CCI was a really awesome decode for calling the last top of the bear rally when we made the double top at the 200. That was a live signal. And we're going to go back and look at that chart in a minute just by clicking 2-week here. But on the weekly, I just wanted to check out the Gaussian for a minute here. Like I said, just from a timing perspective, we've been red in the Gaussian for about this amount of time. In the last bear market, it was red for a huge amount of time. Now, we don't want it to get super overextended, but we could be potentially, if we just do the same chunk of time, we are right here, right? And coincidentally, that is around the 200. And then price went from around 26,500 down to about 15. So if 50% of around 25 is 12 and a half, I mean, that's close to a 50% move. It's significant. It means if you have, that's the difference of having one Bitcoin or a half a Bitcoin or a half a Bitcoin and no Bitcoin, so okay, now we're gonna just take a break out of that because there was this distribution between these 100, 200. We haven't even touched that yet. Don't you think we need some liquidity sweep there? Like, buy this, right? And then if you held throughout the whole thing through like late summer now, you would have a really good price. Yeah, it might make one low. We don't need to finesse it too much. You could have half on here and half on here for the portfolio. When we get here, I am launching a full size portfolio trade on $500,000. And why would I do that? Look, there's 17,429 in price and moved all the way up here to 25,683. Okay, that's about 8,000. Someone can do the math on this. What's 8 divided by 17? That's pretty close to 50% of a move. I'm not missing out on a huge rally. it needs for me to go unload on that. Now, what I'm doing is like it has to be this huge size. Well, I could have went on this smaller double bottom one if I just said I'm just doing my day trading account or a smaller amount of the portfolio of two, something like that. I don't have to always go full size. I'm down to go full size on the next real opportunity. And let's just say it doesn't take this amount of time and you don't get that and it breaks down well, then you still got a good price in the end. And you can always get out as well. But the next one you're taking profit here, then you're getting out because it's more in alignment with the time cycle chart. Let's go take a look at time. We've looked at price and how it's behaved. Now we're going to look at time and how that behaves. Not moon boy. All right, time. Weekly. And we're going to go to here. Okay, let's get the time factor down. Okay, so we have these time cycles with unique dates that are very, very useful for predicting major inflection points. Why shorting here made sense, and why shorting here and then going all out made sense, or why buying all in into your portfolio made sense, taking some off here and then whatever, because they're major turning points. You can expect a major move where you can hold for very far targets that you would find on the same time frame that you set the target at major zones and turning points. Major moves, major turning points. Now are we at a major turning point? No. So that's why on December 7th, December 26th is my next prediction for the start of the bull market. I just, I wanted to start sooner, but this chart has been the best predictor of it, of an inflection point. You see how it held for the final leg of this bull flag in a bull market, bull flag in a bull market, bear flag in a bear, you know what I mean? Sorry, bear flags in a bear. Well, this is really the bear flag. Technically, this one wasn't at the time cycle, but this balance was mature enough. You need a mature balance to get a trend because all balances will end in a trend and all trends will end in some form of a balance, right? The balances are not just pure balances. Like obviously this is a bear flag balance where it's looking like we're making higher highs and higher lows, but it's doing so within the context of a bearish, bigger picture pattern, a bear flag, right? NLP, get that inside you so you trade better next time. Coming down here, low 50s, that's in coincidence, confluence with the 300. That's when I want to go all in. There's also this trend line that I was talking about as well. Now let's look at a couple of different things. Like I said, on the relative strength index, on the RSI, we are in the oversold territory, typically 20 and below, but it has to confirm it with a break above it where the blue gets above the orange, and it does take time to mature down there, just like anything else. So I don't expect this to be there's like it's good. We're like this basically portends that we're closely approximating an opportunity cycle for the portfolio. At the same time, right, we're looking at other things. Like it's just not in alignment yet with the time cycles. And this is a different relative. This is a relative strength index divergence indicator, a little bit different than this one below it. And I drew this trend line because it's acted as a multi-year major resistance zone. Notice it helped call this top. So this one had a lot going for it. It had this hitting resistance and in confluence with time cycle. So you had price level, phase of the market. Keep in mind that was our second lower low. You had major resistance being hit on your momentum, confirming that you were about to have a huge reversal in your uptrend. On top of it, here, your relative strength index was starting to go into the overbought territory, typically above 80, and then reverse quickly. Like everyone thinks that's what's going to happen here. Overbought, reverse quickly. Well, guys, let's go back in time. what I'm trying to say is it doesn't need to reverse quickly on the bull side in a bear market. You want better trade location. So, like I said, the theme of this one was to differentiate between a tradable reaction for a scalp and a trade zone fade, for example, for a reversal or any type of trade for a reversal or a bigger move based on higher time frames and larger targets. And you can put on longs and shorts simultaneously. It wouldn't have been incorrect process to put on a larger time frame short here. It's like max size on your portfolio, and possibly quadding out and then go long again here and holding a smaller size because it's only a counter trend for that. Because you want to bet your position size in proportion to your reward to risk. Like obviously I have the phase of the market down, but I'm missing the counter trend opportunities recently because of maybe not focusing as much of the system on the reward to risk ratio. There's great rewards here in these counter trends, and they move pretty strongly for weeks at a time. It's foolish not to capture them. So we have to be savvy to do that. I'm not going to ape into a pullback continuation pattern. This still has to prove itself. And we can hit the 2 week now and see if we're getting any extra data. You can see the 2 week gave a awesome inverse bearish zero line reject when it hit the top of the bear flag. I also showed you that we had a rising wedge bearish bigger picture pattern embedded within a bear flag, which is another bigger picture pattern. So you had a confluence of pattern bearishness happening with the 20 looming overhead and the inverse zero line reject on the weekly. Now, we don't, like I said, this is more of an indecision point on the 2 week here because we don't have anything here that says that we're not here making a hook from extremes. That's what I would love to see to start putting on big size for portfolios and counter trend trade or even give an ultimate low and just ride it. If we get a hook from extremes down to 47 to 49, it's going to come back up here, right? That's just what it's going to do. It's just action reaction. Huge buying tail here. You have a bunch of liquidity here. Like I said, we have liquidity here, but when we zoom out, it doesn't seem as important. We'd have to go on this one to get a better view of it. Yeah. And still, like I said, just indecision pause days around this 100 with a huge head and shoulders pattern, while MSTR potentially can produce a black swan with that Adam and Eve pattern, which is a high hit rate. And geopolitically, we all knew the Iran peace deal was probably going to stop because they, you know, every time Trump agrees to something, they reverse it. Trump doesn't mind blowing up stuff. He's been a pawn the whole time. So that's that. We have to be patient here because that's just what we have to do as traders most of the time is be patient. So I want to stop the share for a minute. I think this was good enough today, right? If people were on right now, then I would ask a bunch of questions. Like I said, if you're watching this and then want to hit reply to this, like you have a trade question that you maybe wanted to ask today that you couldn't. So you can feel free to do that in the channel, keep your spirits up, and we will keep you on the right side of the market. Over and out.